What's going on, guys? Welcome back. Week number 5, L&J Financial podcast. This is Julian.
This is Lucas.
And we're coming at you with the purpose to inspire and enlighten the younger generation of stocks, finance, and mindset.
Yes, let's do it. All right, happy holidays, everybody. It is the
Happy
week of
holidays.
Christmas. If you're Jewish, happy Hanukkah. If you're celebrating Kwanzaa, happy Kwanzaa. It's terrific. It's good vibes here in San Diego. We're feeling good. It's the holiday spirit. We're nice and toasty with our coffees here in the office.
I love Christmas.
Coming at you guys with, you know what? All we want for Christmas is not you. It's gains. And not just gains, capital gains.
Straight gains.
Straight gains in the market. And that's what we're here for. We're Santa Claus. We're Santa's little helpers.
Yeah, we're here we're gonna give you some better Christmas gifts than what Santa will bring you this year. We're gonna give you some stock advice.
Let's just say if you can give Santa $10, what if Santa can give you back $20? That's the best Santa Claus there's. And that Santa Claus is the stock market, and that's what we're freaking doing today. So let's do it.
Yeah.
So, first things first.
Let's get into productivity. All right, we're gonna be talking about productivity, what we do personally to keep us productive and get our tasks done during the day.
And I think it's perfect because we're going into the new year. And I mean, new year, new you, whatever you want to say. Honestly, fuck it. People say January 1st is when you start. No, make every day your January 1st. Every single day. Make today your January 1st. Whoever's listening to this today, make this your January 1st. Make every single day you wake up January 1st. And that's what we're going to teach you. And that comes down to being productive. And we're going to give you guys some, what we do personally, what works for us. I know what I do is a lot different than what Julian does. But I think it's great that we have both our perspectives on the podcast talking about it. So I'm going to go first. I'll talk about what I like to do, and it's super easy. I make a to-do list the night before every single day. If I'm not out doing something, if I'm home, I try to be home, and if I have the brain power to do it, I write a to-do list at around 10:30, 11 o'clock every single night before bed of what I want to accomplish the next day. Because next day comes around, you wake up, you know exactly what you need to be doing. And I like to do 3 to 5 things max on the to-do list, because if you put too much there, it almost all blends into one, and it's like one big thing and you don't even want to do it. If you do 3 solid things, if you can pick 3 things that you want to do and that you'll be satisfied doing before you go to bed, the next day you feel as though that you took a good step forward in yourself. That's what I recommend doing, because most people wake up willy-nilly without what they want to do, they're not working towards something. And that's why a lot of people aren't growing. That's why people aren't growing their financial status. That's why people aren't making the companies they should make or make the things they want to make. It's because they're not setting goals for themselves. And it starts small. Like, let's say you want to get into working out. Just go. One of the things on the to-do list is work out 45 minutes straight. Pop a playlist in, go. And next thing should be, I want to wash my car. You want to wash your car? You want to clean your car? Want a better car? Wash your car. So working out, wash your car, and fix up your portfolio, whatever. Julian, what are your thoughts on productivity, man?
Yeah, I think having a to-do list is a great way to stay productive during the day. That's something that I do. That's what a lot of people do. And one of the things that I do personally, that I don't know if people have heard this, but making your bed first thing in the morning is a great way to set a really positive foot off for the day and having a really productive start. Having a made bed and completing one small, easy task first thing in the morning puts you on the best foot to start your day off and complete the next 10 tasks you want to get done.
Exactly.
And then one other thing I'd like to talk about is getting up early. And it really is kind of underrated how much time you actually will get extra during the day by just waking up an hour earlier than you normally do, or maybe 2 hours. I wake up every day around 7:30. I hope one day I can wake up around 6, maybe 5. And think about that. By 10 a.m., you've had 5 hours of the day just to do whatever you want.
And meanwhile, most people are waking up right then. And that's the thing. I'm not saying it's a guarantee to become success, because obviously you can work hard and fail. But the thing is this. Success involves hard work, no matter what. I mean, just work hard and you'll be on the right foot for it. But waking up, almost every successful person in every industry wakes up early. That's trying to make it, and that's already made it, they wake up early. And you don't need to wake up at 4 a.m. You don't need to do a 2:45 a.m. workout like Mark Wahlberg, right? We're not saying that, because I personally cannot stick to that. That's crazy. But what I can tell you is working on yourself on getting up early. If that means going to bed earlier, that means discipline. Now, that's going into discipline. We can go into that into another podcast. But having self-discipline is one of the biggest things. And that goes into being productive. So as Julian said, waking up early, whatever that is to you, I recommend pushing yourself back an hour. almost every week. Every week, work on getting yourself back 1 hour until you want to get to that 6 a.m. mark, that 7 a.m. mark, that 5:30 a.m. mark.
And and especially for the stock market, living on the West Coast, markets open at 6 a.m. Pre-market has been open for a couple hours already. Trades, millions of dollars are being made while you're sleeping if you're in bed around 8 o'clock. So, if you're watching this podcast, I'm assuming you're into the stock market.
Or want to get into the stock market.
All of our goals are, at least living on the West Coast, is to be up by 6 a.m. and ready for the day because, millions of dollars are being traded while you're sleeping.
Yeah, and it's kind of like, when you're sleeping, you're missing that opportunity to succeed. Like, when you're sleeping, when you're not working, somebody else is. And that goes for everything. If you want to be successful, the best artist, you want to be the best painter, you want to be the best stock trader, one of the best investors, you got to put in a lot of work. You got to be the hardest worker in the room. And one of those things is getting up early. If you're getting up at 10 a.m. every single day, that's great. But you know what? I have 4 more hours of the day than you do. We all have the same 24 hours. It's all how you use it. And when someone goes, well, I don't have the time. Well, no, you don't. You have the time. You just decided not to prioritize that. And that's what being productive really is. And we really want to set this straight a week and a half before the new year to just really come at you guys with that message, because that's really what it comes down to, is just being prepared and being in the right place at the right time, being ready for the opportunity. And getting up early is one of those things that will help with that.
Yes, sir.
Obviously, we're going to move on now to the market overview and our thoughts on the market. Now, last week, kind of a turbulent week, one of the turbulent weeks on the Dow Jones, but it did end up. We have Tesla coming in, getting posted on the S&P tomorrow, Monday, the 21st, yes.
Big day.
Which is going to be a big day. It's probably going to be an up day. I mean, then again, I might be wrong. Who knows? I'm not a prophet, but I think it's going to be a really, really, really good week coming this week. Christmas weeks is always one of the best weeks in the market. I mean, it's really rare there's a down week for a Christmas week market.
Yeah.
And we want the Christmas miracle, and the Christmas miracle is going to come. But yes, last week, vaccine news. We saw the first rolling out shipments of the vaccine coming out in Michigan to the healthcare providers. Same thing in the UK. But there's a lot of problems that are going to be coming forth. We don't really know how the problems are going to be, but it's going to be the distribution issues. There already is issues with the distribution. I mean, there's a couple 100,000 doses that didn't get to the right place at the right time somewhere in Washington. And where are they? We don't know. Well, that's going to be the big question coming forward, continuing with the millions of more doses that are going to be being produced into the new year. And obviously, you got the stimulus trade talks. No one knows what's happening. Honestly, I think it's a bunch of, like scene in Wolf of Wall Street, Matthew McConaughey goes like, it's all angel dust, whatever. That's why I think of the stimulus news. It's a bunch of crock. It's a crock of shit. Really, I think that it's people's excuse of why the market goes down. I think that's going down for other reasons. But last week, it stayed up. Dow was up. And our picks. Me and Julian are going to talk about our picks from last week.
Yeah, we'll do that right before we talk about our picks for this week. But I just want to talk about, I think that, with Tesla getting added into the S&P 500, that shouldn't just be news for Tesla. That's news for all other EV companies that are, trying to break that bubble right now and have a foot in that industry. So this week, and especially going into early 2021, please be adding these EV companies to your watch list. Tesla, NIO, Helion. We got all these new companies coming out, all the new charging companies that are coming out. Switchback Energy,
Plug Power,
Blink. These companies you got to be looking at and you got to be watching right now, because Tesla getting valued at what they're at right now, getting added to the S&P 500 is incredible news for the EV industry as a overall.
Honestly, that's such a great topic that you brought up in that introduction of this electric vehicle, energy friendly companies being added to the S&P, because we're going to see a whole lot more of that getting added, and their market caps are significantly less than Tesla, but that's not going to be for long. Eventually, companies like NIO, like you said, like Plug, like Switchback, you said, right?
Yeah, like
Workhorse. These companies, you think they already have runs up? You think they already had a run up? You think you missed the initial run up? I'm going to be here to tell you you didn't. Now, obviously, no guarantee. We're not, prophets. We're not going to predict the future. But I think, like Julian says, if you compare it with the market cap of Tesla and what they're providing, which is very similar to what Workhorse and all these other companies are going to provide, it's going to be a very similar market cap, and eventually they could be added to the S&P. I think they will be added.
Yeah, and just so you know, like NIO that's basically the Tesla of China, and that's the car that they're going to be driving around in the next 10 to 20 years as their main electric vehicle. Yeah, and Tesla is, incredibly. I mean, they're one of the top 5 most valuable companies in the world, going up next to Amazon, and yeah, it's these companies, all of them getting in right now they're still at the very early stages.
Yeah.
These companies are going to grow 5 times in the next couple years.
And you look at me and Julian were talking about this just the other day when we were at lunch, and we were talking about how basically it's priced. Basically, the reason why electric vehicles are so expensive, the real cost is in the battery, and it's in the kilowatt or the watt of energy. It's like 100. It used to be $200 per megawatt, whatever watt of energy. I forgot the specific measurement of unit, but it breaks down to that metric. Well, they say, I read an article on CNBC and it was talking about how these watts are going to be priced. They're at about $125 per megawatt, whatever watt of energy is in there. They're going to go down to $100 by the middle to the end of 2021, meaning the cost of electric vehicles is just going to get less and less, more and more affordable. We saw that with, if you look at the automobile industry where it started with, Henry Ford, when he really established the assembly line, cars were around just like electric vehicles are around, but they weren't the most affordable. They weren't. But it takes someone like Henry Ford, a visionary like that, to mass assemble and make it readily available for the masses. And then you saw the rise in automobile transit. Same thing's going to be happening with the electric vehicles, as well as all the companies funneling into that sector, just like Julian was talking about. So it's going to be more and more readily available to more consumers around the world. Mm-hmm. I think we're going to see way less gasoline cars. I think California said by 2035 they're going to ban the restriction of production of even gas-powered cars, and that's only in 15 years. So really, if you want a long-term hold in a portfolio, like Julian, name some of the companies you just said.
My favorite companies I really like NIO at its price point. It's ran up a lot the last couple of months, but still at $50 or right around $40. That's a great price for what these companies are going to be at in the next couple of years. So NIO is something really, if you really want to look at a growth company, look into NIO. Look into Switchback Energy, which is going to become Blink. These companies are going to be dominating the market. And yeah, so, going into 2021, this just takes us into our next point. And how are we looking at the market in 2021? Like, where are we seeing things are going to go?
Well, I think we mentioned it last week, but we're going to mention it again. I'm exceptionally bullish on it. 2021, obviously, given the pandemic will be slowed down significantly, given the development of herd immunity in the United States. At least it's gonna take a while for third world countries to get to where the United States will be in other first world countries with the vaccine, and in terms of the widely distributed vaccine and people's immunity to the virus. But I'm predicting by September 2021, it's going to be more or less back to normal, what we're used to before the pandemic. And that means sectors like travel and leisure industry are going to be huge. But I think when we look at leisure, people think of movie theaters, think of malls. I think malls are going to get completely redone. They're going to go more into luxury. You can look at the real estate investment trusts. Right now, for real estate investment trusts, if you guys don't know what that is, it's just a company that pulls money from investors to invest in properties and property management, making buildings. That's what a real estate investment trust is. And I recommend going into not commercial real estate investment trusts, but housing real estate investment trusts and whatnot. Commercial, it's going to be kind of shaky for 2021. If there's one shaky sector in 2021, it's going to be the commercial sector, because a lot of companies couldn't pay rent for a long time, and we're seeing more and more go out of business right now. So I'd stay away from the commercial. I'd go into the real estate with terms of the individual housing and housing planning and new development of communities. But I'm exceptionally bullish on the market for 2021. Just given, Julian, what are your thoughts on it?
Yeah, no, I'm totally bullish as well. I think that 2021 is going to be a great year for the stock market for businesses. I think that consumer spending is going to go up incredibly by a lot in the next couple months. Stimulus checks are going to be coming out. I looked at a graph, and right now, I think personal savings
is at
accounts are at all-time lows
since 1980. Since 1980, you're right.
It shows you that at least right when the virus started happening, we saw that spike in savings going up. People are holding on to their money, and it shows you that Americans have a lot of money that they're holding on to.
There's about $5 trillion on the sideline right now.
Ready to blow in the
$5 trillion.
So yeah, malls reopening, movie theaters, travel companies, cruise lines. Look at all these for 2021 when people have that extra dollar in their pocket to spend. And see where they're going to be putting it.
I wouldn't go for cruise lines. I personally am not bullish on cruise lines. I'm very bearish on cruise lines in the future of them because they're like petri dishes for infections. I think every other industry for travel and leisure is a buy right now. If you want to hold, next month you're not going to make your money back. Maybe not in 2 months. In 8 months, almost guaranteed any travel and leisure company, given air travel, given movie theaters, given all those malls, property that management that like Simon, I think they're called Simon something partners that do malls, terrific buys right now. In terms of cruises and cruise lines, I'm very bearish on them. I think they're gonna have a very hard time recovering for a very, very long time. If not, that industry will be completely gone. That's my personal take on it, though. I'm never right on it. I just think that it's really hard to come back given this pandemic for something that's just like cruise lines. Julian, do you have anything on that, or do you?
I would say I'm not necessarily bearish on the cruise line industry. I definitely think there's possibilities of the cruise lines maybe switching to something else. Maybe like Carnival Cruise, American, Delta Airlines, or some of these companies that, they might not be able to recover fully, and they might just switch what they're actually doing instead of going into the cruise line. Carnival might switch and start making planes. Something like that. But the companies still potentially are still valuable, and they're definitely something to be watching because people can believe that the cruise lines are going to come back in a day. Next thing you know, you have a 10% run up. That's about gains right there. That's profit.
That's profit. Exactly. So hey, either way we look at it, I think 2021 has an incredible year just given the amount of consumer spending that's going to happen. There's going to be more things to shop in person. Everyone goes, well, Amazon made that extinct, Alibaba made that extinct, Shopify made that extinct. No, it didn't. Those things are strictly for convenience purposes. People are still going to want to go out and shop. You see it today. You go out to your local outlet mall, I guarantee you, a lot of people are out shopping at outlet mall. Well, you think, well, there's Amazon. Well, there's no fun in Amazon. You don't get to sit down and have a steak dinner with your family and then go shop on Amazon. You just buy what you need. So consumer spending is going to come back huge in 2021, meaning retail companies, any company in that sector, as well as travel and leisure, it's going to have a huge run-up. I'm very, very bullish on that. Now, for the most exciting part of the podcast is the top 2 picks for the week. Everyone loves the top 2 picks. Now, first off, before we go into the top 2 picks, we got to talk about how we did last week and what our picks did. So first things first, Julian, what did you pick last week?
So last week I was expecting my play was some of the travel companies to have some run-ups following the vaccine news. However, it didn't necessarily come out the way that I was looking at it. Delta Airlines and a lot of the travel companies, they've pretty much been consolidating for a while now, and I'm still watching them, waiting for a little bit of a bounce. But last week it wasn't the best week for the travel companies. They didn't follow vaccine hype as I planned. But I'm still watching them, and I'm still, a lot of these companies are still down over 50%. So they're 100%. Still very good buys long term. 100%,
just like we talked about, 2021. Those companies will be 100% coming back to what they were in terms of domestic flights, because people are going to have more confidence going onto an airline in June of next year. But hey, we're going to be really transparent with you guys. We're not always right. We're not prophets, like we said. And last week showed that for Julian, I was wrong about. Honestly, I forgot which one. It was 2 weeks ago. It was one of my picks I made 2 weeks ago. I was completely wrong. I was down 15% for the week. But that happened. That is the risks of trading stocks. You're not always right. Our sentiment is not always right. But you know what? We love giving you guys recommendations, because if we are right and you guys listen, you choose it, great. It's a win-win. We won and you won.
Yeah,
and that's what...
And just always, whatever we say, don't just blindly buy any ticker that we say, Do your own research. Check out everything you need to check out with your stock. Make sure it fits your criteria before you make a position on it. And, that way, and it's all about having more picks that are right than not. You can have, as long as you got 5 picks that are green, 1 pick that's red, you're still profitable that week.
100%. And then going to my pick for last week, it was Jumia, JMIA. Terrific week. Went from $36 on Monday up to $42 on closing. It's currently at $42.16 right now. Really good company. We talked about how they're planning to become the Amazon of Africa. Obviously, logistically, it's going to be a nightmare. But I think that they have the strength and they have a pretty good market cap. And right now they're running negative earnings. But then again, what was Amazon doing in 1996 to 2002? They're running negative earnings. They weren't even positive. But look at Amazon now. Exactly. That's the exact trend Jumia will be following. And now, for the most exciting part, is our top 2 picks for next week. Now, Julian, you want to start off?
Yeah. All right. So my play that I'm going to be doing, I'm doing a call option play on Alibaba. Ticker BABA, BABA. This is another one of the most valuable companies in the world. I think it's the 3rd most valuable company in the world. Don't quote me on that. But this company was pushing all-time highs at 320, and it has had nothing but a complete beatdown for the last, I'd say, month and a half. We found a bottom right around like $250. And we're hovering right around 260 right now, but I'm still looking for a pullback all the way up to the 275 to 280 price range on Alibaba. This is a technical play, but this is a valuable company. There's no specific reason for the overall beatdown other than the fact that they have to agree to follow U.S. stock market exchange rules in 3 years or else they'll be delisted. They will do that completely, but for right now there's been a beatdown and it's a great buy right now. It's completely oversold, and I'm looking to make a play on it. Price target is 275 to 280, and
we're there right now?
Around 260.
260, all right.
So
great plays, great pick. All right. And that was Alibaba, BABA?
Yes.
Awesome. All right, my pick for the upcoming week is Yalla, Yala. Yalla is a company based in the United Emirates. It's a company that basically focuses on... It's a voice-centric app where it connects people. It's kind of like a FaceTime, but with games like dominoes. And I forgot the games you play with the beads, where you put the beads into the different like holes things. But the point is, it's really huge. It's getting a lot bigger. It's a pandemic-proof play. Anything digital, online, Zoom-related type software is a pandemic-proof play. It's a really good short run-up. They had a lot of PR come out about them last week, and I always notice with companies that are pandemic-proof that have a lot of PR come about them for like 2 weeks before, that run-up is that following week, and that's tomorrow, and given this whole week. So I think Yalla is a terrific up. It was up about 8% last week. I bought them on Tuesday. And I think there's a lot more growth in this company. And people want virtual companies right now. There's a demand for that. Anything that's virtual, anything involves, contactless, stay-at-home type thing is really popular right now. I don't know how they're going to do during the non-pandemic world of 2021 and quarter 3, but what I will tell you is this. Yalla's a great pick for the upcoming weeks and given the next 3 to 4 months with the pandemic in the world. And, their earnings are positive right now. They're new, but I think they have a really good pick. And, that's my pick, Yalla.
And, just one last thing I just wanted to say, because just a lot of these pandemic companies, or a lot of companies that have had run-ups during the pandemic, these are at all-time highs. These during this time right now, when we're recording this, like the pandemic is really bad. Like things are pretty bad. So these companies are doing the best that they've ever done right now. So long term, looking at these plays, don't be buying these companies and thinking a year from now you're going to be profitable, because actually in a year from now, a lot of these pandemic companies, these online Zooms, Yallas, they're going to go down a lot in a long time once the pandemic has gone over.
But I think with Yalla, I was looking into them just this morning, and they've got a really good company base and a really good company mission statement of what they want to accomplish. It's really popular around older generational people 65 and up, that it's a cafe style, so you can go into random chat rooms with different people and talk to them. So I think it's really cool for people that genuinely maybe might not be able to go out to cafes, just not because of the pandemic, because they're just older or they don't really have the connection to do so. But like Julian said, there's no guarantee in these companies in the long run in terms of these pandemic-proof companies, because once the pandemic's gone, where's the demand for them? We don't know. But we only have to see. But yes, that concludes this week's L&J Financial Podcast. We thank you guys so much for tuning in. Wishing you Merry Christmas and Happy Holidays. This has been Lucas.
It's been Julian.
All right, take care.
Peace out.